now get a corporate conversation going. KEC International is the company that we're going to speak with now. The company recently bagged orders worth over 1,000 crore rupees. In fact, earlier this month also they had announced new project wins of around 1,200 crore rupees. We're joined by the company's MD and CEO Vimal Kejriwal now to discuss the new orders, how the order activity is really picking up, and what we can expect for the rest of the financial year. Mr. Kejriwal, thanks a lot for joining us. This is Pavitra. So you've announced an order win of 1,000 crores now. There was earlier 1,200 crores that was announced as well. Can you just take us a little bit through the details of what this order, really is about? What is the kind of revenue that you expect, and what is the order execution timeline like as well?
Good morning, Pavitra. So this order primarily has three components. One is the domestic T&D order. Then we have got a couple of orders from civil and some cable orders. So if you look at the timeline, most of these orders are typically between 12 to 18 months. So a large part of the revenues will start accruing between Q2 and Q4. Okay, and with this, our total order book is roughly around 30,000 and odd, and L1 of 3,500-4,000 crores. So we'll be close to 35,000 crores in terms of the overall numbers.
35,000 crores in overall numbers. So give us some sense of margins, because when we spoke to you, I think it was in March, you'd given a sort of projection that the new orders that are coming in should be around the 8 to 10% range. Is that what these new orders actually carry as well? And how do they compare with the blended margins across the order book?
So, Survi, these orders are typically in the same range, 8% to 10%, which is right. And blended order book has a slightly lower margin in terms of when you factor in the current commodity prices, etc. When we have taken the orders, all of them are typically in the same ranges. But when you do a cost to completion, etc., then the range may be slightly lower. But I don't think it's very different now. Okay,
so let me sort of try and get a sense on that. And I know that you can't talk too many numbers because of the silent period. In general, I think as we look at FY24, the market is very excited about order visibility. I mean, your order book is anyway very healthy. We are seeing the order inflow continue. But can margins become a bit of a spoil sport, a dampener? How do you sort of look ahead to the rest of this year?
So let me put it this way, that all the factors which had impacted the margins in the last 2 years, be it COVID, be it the impact on supply chain due to the war, the logistic cost, and especially the commodity volatility. I think the war is still there, but most of the effects have gone away. The commodity volatility is now a thing of the past. At least now the commodity still moves up and down, but within a very, very narrow range. So that is helping us in ensuring that we bid at a price at which we can, execute the orders. The logistic costs have definitely come down. And our major issue had been our Brazil EPC losses, which we had very clearly said in the earlier calls also that those EPC projects have, been completed. So I do not see any major negative, going forward, in the year H2 and, maybe even Q2, etc.
Okay, just speaking of your Brazil business, because you did mention that, you had earlier mentioned that you will be PBT positive for Brazil in FY24. Do you still maintain that that's possible?
I think so. I think we should be PBT positive, yes.
Okay. Mr. Kejriwal, on a broader sense, give us again an overview of the company's growth this year. Also a split between the pie. A huge part of your business is now coming in from international operations. Is India the smaller part now? That's point number one. And number two, which are the segments? T&D, you have a small presence in water, for instance. But in terms of just incremental ordering and growth, where do you expect the maximum amount of traction this year?
So first of all, in water, it's not small for us. It's now almost our order book is more than 4,000 crores. That's one part of it. As far as the split between domestic and international is concerned, right now, internationally, we are only doing T&D. Okay, we have started bidding for railways and civil. So hopefully this year we should see some successes on both the railways and civil. So the split between order book would be 30% international and 70% civil. But this 30% is entirely transmission. Okay, so that's the way it is. As far as the growth is concerned, I think clearly the growth in transmission has surprised us. I don't think we had expected transmission to grow so much as grown last year. And also, when we look at the tender pipeline, especially both in India and Middle East, I'll say Saudi Arabia generally, and a part of it in the United States. I think there are three geographies where we are seeing a lot of growth which is coming up. And the second piece for us has been civil. Civil has been doing very well for us. Our current order book is more than 10,000 crores. And we do expect civil to grow by at least 50% even in FY24. The business which is not growing very much, I think, is the railways, which is a bit of a disappointment because we had thought that railways would grow continuously. But I think with the emphasis of government more on the rolling stock and Vande Bharat trains, etc., we are seeing a little bit less expenditure on the infra build, which I think will come because the trains will need tracks to run. I think it's a matter of time that the infra build will happen.
Okay. Got that, Mr. Kejriwal. Good talking to you as always. We hope to have a longer conversation perhaps next time, maybe after your earnings, but gives us a good overview of how the business is shaping up, how KEC International is looking at this year. Thank you. We'll take a quick break on that note. On the other side, we will come back with some technical ideas. We'll have an analyst joining in, Sudeep Shah of SBI Securities, with a few trading ideas.